Good morning, traders and investors. Welcome to Benzinga's pre-market prep, brought to you by Options House. I'm Joel Elconin, along with Dennis Dick and the rest of the Benzinga news desk, Brent Slava, Jake LaCure, and Joe Young, bringing you the markets today. Dennis, how you doing?
Not too bad here, Joel. A little pullback here this morning after a little bit of rally there on Friday. We got a little relief rally, but a little relief sell-off here for the shorts this morning.
Right. Well, let's just preview today's show. Dennis, you have lined up Eric Huntsader for us. Now, he's coming out at 8:30, 8:35. He is the founder and CEO of Nanix LLC. Eric, Dennis, I know you do a lot of consulting with him on high frequency trading, and he provides incredible data when these flash crashes take place, really minutes afterwards. Following at the 9 o'clock hour, we are going to have Andrew Vanazzi, COO of the Options Pit. He has been on the floor and he's translating what he's done onto the floor onto the screen for you guys. So we'll get going with him at the 9 o'clock hour. But Dennis, quick recap of the S&Ps. Rallied up 77.50 in the pre-market, but we lost some steam here. Now we've come back to the close. You see any macro news knocking us down overnight?
Well, a pretty wild range here overnight too, Joel. Usually we come in, we get 3, 4, 5 points as of late. This was a 12-point overnight range. So like you said, we got up to 1877. We went all the way back down to 1865.75. So knocking us down 7 or 8. So we're kind of stuck in the middle here, up at 1872.25. But support's been very, very well defined here over the course of the last month. Every time we get into the 1860s, the lower 1860s, we bounce. And even overnight here, the bottom pickers bounced us back up there too. So kind of trading around here, settlement, kind of in the middle of the range here for today.
All right, let's just keep an eye on the close and the high since they were so close to each other, 74.75 and 75.75, and then that pre-market high. So well-defined resistance support. Well, it's well defined, but it's a lot lower. Thursdays and Fridays low is right around the 1860 level. So that's what we're looking out for.
Johnny Spangler's pumped up in the chat, throwing tickers at us left, right, and center. We will
Oh,
get to a few of those. Caterpillar, XOM. We'll cover a few of those just in a minute. But let's quickly look at the gold market because we are bouncing in gold here again this morning. Up at 1301, we sold off a little bit there. Friday, obviously, the weakness with the market bouncing back. It seems like the negative correlation is definitely in full steam here right now. But gold bouncing up here, $7.50 this morning, back over 1,300 bucks in the June contract.
little consolidation here over the last few sessions, and still, I mean, now trying to peek its head over 1300. Just seems like there's, and I hate to use the term, but just seems like there's a bid underneath this market. You know what I mean? You've had one, two, three, four, five lows right around the 1290 area. It's just like someone's just has a huge opinion there, and every time he gets there, they're buying everything, every offer comes in sight. Today's low, 1289.50. Moving up, I'm going to give you the 0730 level is a minor resistance point, Dennis. But a few weeks back, we bumped up against 1315 3 days in a row. So that's my big level on the upside.
Crude's drifting up here a little bit again this morning, 102.75 we just ticked up to, so up 73 cents. We are now moving quite a bit ways away from that $100 magnet level that we have been talking about. And crude here is still performing quite well. We've obviously got XOM and Chevron that had a little bit of a rough last couple of days, but crude itself is still pulling up.
You remember how Bob Bright used to say they don't hit bids when the market's going up?
Yep.
Yeah, well, I had a lower bid in last night in the crude market, and
Yeah, you can't do that. You got to lift offers, Joel.
I know, I know. I was just trying to get a
Where
little.
were you trying to buy it?
I was trying to buy it in the 10140s. I was looking for a little bit lower risk trade, and I got the 10152. And I don't think anybody was trading ahead of my one lot, but it missed me by 7 cents. And then woke up this morning, and lo and behold, it's up. Now it's up near resistance, so let's just keep an eye on the 10228 level. We did take that out by 7 cents, but that was our high from last Wednesday.
And we've talked about crude. Out of all the charts that you look at, you can look over the S&P futures. Obviously, they've held up well, but some individual stocks are broken. But it's kind of been energy that has held us up. Crude has held us up. It's been holding up. The energy stocks themselves, even the big guns like ExxonMobil and Chevron, have been holding up. But that kind of broke a couple days ago when you saw XOM really sell off there back on Thursday, held and kind of put in a double bottom there on Friday. But if you look at the Chevron chart, it didn't do the same. It actually took out its low from Thursday. So there's a couple of your big energy stocks there, oil stocks, not looking as healthy as they did 2 days ago.
Do you know who was talking about energy stocks a few weeks ago and told us that of everything in the sector that's what we should keep an eye on?
Who was that?
J.C. Peretz.
And what
Remember?
was he saying? What was his prediction on that
You just
whole
kind
energy
of
sector?
just that that the market if he had to find value in the market, that it was in the energy sector, and that
Yeah.
he wanted to stay away from the momos, he wanted to stay away from the healthcare, and that that was a sector that he thought would show some strength even the market decline, and that's been true here. But let's take a look at the Exxon Mobil. Dennis, we got an interesting chart here for Exxon Mobil. Double bottom here at the 10032, 10033 level. You also had a low of 10031 on April 28th. So that's a level ExxonMobil absolutely has to hold in today's session.
And what about Chevron? Just give us some support there because it took out Thursday's low, kind of trading flat here right now, but a little bit of a scarier chart on the Chevron because you broke down through that whole key 123.5, 124 level where it had been holding up for the better part of a month. And if you look at the April run when we ran from 117 all the way to 124 in the course of about 3 or 4 days, we always say once you start getting back into that area, what goes up quickly can go down quickly. Not a lot of support here through the 123 or the 122 handle.
Well, you know what Harlan says? Harlan says draw a line. And if you had to draw one line right here, it would be the 123 level. 123 is held up for over several sessions and just bumped up it against it on Friday. That's what we need to hold. You see the air underneath that. I don't have to tell you what may happen if we take out 123.
Well, let's talk mergers here. AT&T DirecTV rumored here for the last 2 weeks, finally going down. DirecTV going to be acquired by AT&T, $28.50 in cash and $66.50 in stock, adding up to around $95 a share here. You bring up DirecTV this morning, there's obviously some concern. Stock trading down at 86.30. The ratios are a little bit confusing. If the stock trades below 34.90, shareholders are going to get one. This is on AT&T stock. So if AT&T stock trades below 34.90, shareholders are going to get 1.9015 shares of AT&T. If it trades above 38.55 as of the closing date of the merger, shareholders are going to get 1.724 shares. So they're kind of getting a range of a price there. If it trades between 34.90 and 38.55, they're going to add up to about 66.50 in stock. So I guess that's how they came up with this whole $95 price here. But with the stock trading $8.50 below that takeout price, maybe there's some concerns here that, obviously regulators might not give this as much ease of approval as the market thinks anyway. So the market doesn't think it's going to be that easy.
You were talking about this one, how, buying it on a pullback, hoping that the
Yeah.
deal would go through. I think you'd be a little bit frustrated now.
Oh yeah.
Yeah.
I didn't buy it. I was thinking about actually buying this last week at around $85 because I was looking at it from a risk reward perspective, and it's been working. It's the buy on the rumor thing has been working. It's not working in this case, but buy on the rumor has been working with some of the other plays. And I was thinking, well, if it doesn't go through, I probably got a downside to about $76, $77. That's where it was trading when these rumors started. And if it does go through, I probably got 95 to 100. But when I was analyzing that risk reward, I was like, well, I got $10 upside, $10 downside. This is not good enough. I always like the 2-to-1 risk reward, and I was seeing 1-to-1, and I'm like, nah, that's a coin flip. If I want to do 1-to-1, I just go to the casino roulette wheel and bet on red or something. So I passed on that, and obviously the deal's going through. But if you did pull the trigger, you'd be partying Sunday night, and then when it stock opened here this morning, you'd be like, what the hell?
Yeah, I mean, didn't AT&T have huge regulatory problems? It was a couple years ago they were trying to take somebody over. I don't know if it was T-Mobile or whatever, but they ended up paying a huge tab on it because if the deal didn't go through. So maybe there's a little bit of trepidation on part of investors that who knows if this deal is going to go through. But when we were looking at it, a chart and talking about it last week, I was thinking, well, it worked the last couple times, with the Lorillard and with a few of these other things. So you can't go to the well too many times, but we'll just have to wait for this one to figure itself out.
Brentster, there's some analysts talking here about this deal here. I know Jeffrey's had some comments on
Yeah.
Wonderlic actually downgrading DirecTV. Are you following the analyst commentary on this deal?
I've noted a couple. I could put a little something together for you and come back to you in a few minutes.
Okay, go hunt down.
Yeah,
Jeffries
sure.
was saying that they didn't know if they were really in love with this deal here. Wonderlic downgrading DirecTV, but Raymond James upgrading DirecTV. So you got the analysts kind of mixed on this deal. We'll come back to you in just a second
Okay.
to get that. The other deal that has been on the table here for the last month, AstraZeneca and Pfizer. Pfizer's been trying to get AstraZeneca. They raised their final proposal here over the weekend up to £55. That works out to about $92.48. AstraZeneca board immediately rejecting over the weekend, rejecting the Pfizer offer, and AstraZeneca, A Zebra N, is getting rocked on that, trading down at 71.80 right now. So basically, Pfizer offered 92.48. They're saying no. Shareholders aren't happy about it, and they're punishing AstraZeneca, but they are rallying Pfizer here, Joel. Pfizer trading up 50 cents.
Well, here, if you want to put your theory into work again, here, this is, this is a godsend here, dropping $10, but it sure looks like AstraZeneca does not want to do this deal. Barron's over the weekend encouraging Pfizer just to walk away. Just do something else with your money. Who knows how this scenario is going to end up? Pfizer did get a nice pop in the pre-market up to $29.90. Pretty volatile in the pre-market and after hours. Dennis coming down to $29.50. Now that $29.50 is going to be a big level in today's session since yesterday's high was $29.55. So critical for Pfizer to hold $29.50 off the open here, or else we could be right back at that major support developing at the $29 level.
All right.
Yeah, all kinds of support down there. What do you got, Brent?
So Wonderlic was not the only firm that was downgrading DirecTV today. I also had an analyst over at Atlantic Equities downgrading the stock. We had a comment out of a Morgan Stanley analyst saying that the deal between AT&T and DirecTV is, quote, less accretive than expected. And then also had a Macquarie analyst saying that Dish could potentially make a, quote, compelling counteroffer for DirecTV.
So who's saying they can make a counteroffer for DirecTV?
That was a Macquarie analyst.
That there could be like somebody else floating around out there to make a higher bid?
Maybe, yeah.
That's all interesting here. It's interesting that the stock is trading at $86. So obviously there's still some concerns out here. The market, price don't lie. Coming this morning and say, why isn't it 95? Well, the market's got some concerns here. So that's why it's not at $95. Everybody in the chat is asking about Campbell's soup. Not good food here this morning. Stock reported earnings. Brent, you got the earnings there?
Yeah,
If
sure.
You don't, I do.
Yeah,
what do you got?
I got they reported. Maybe you're gonna beat me to it, Dennis.
62 versus 59.
Sales.
1.97 billion versus 2.08 billion. It's that sales guidance, though.
Yeah.
What do you got for that sales guidance?
So they did cut the fiscal year 14 sales guidance. They also said that the adjusted EPS figure will be at the lower end of the previously issued 253 to 258, and I believe the street is around 257 right now. So that is definitely going to be at the lower end of the analyst estimates.
They are knocking the stock down here, Joel. 42.5. This is a big move for Campbell's Soup. Low beta stock, dividend kind of okay, 2.77%, but they are smacking it around here this morning. What's been the pre-market low?
$41.
Holy cow! They knocked it down to 41. They knocked $3.5, almost $4, over $4 off of Campbell's Soup on this. Wow.
Yeah, could it be wager time here, Dennis? I think the low for the day is in.
I think the low for the day is in too. I'm going to give you that 41. Somebody overshot, got a little bit excited off of that lowered guidance there. I mean, lowered guidance is one thing, but when you knock 10% off of a food stock, it takes a lot more than lowered guidance. I'd be shocked, honestly, if this thing even closed in the 40. I think it probably closes in the 43 handle.
And you know,
They usually come back and they buy the stock up. It's defensive. $41, I'd been bidding all day down there. Gets back down there, I'm bidding 41. My bids are out there, so you can step ahead of me.
okay. Just looking at this too, I mean, besides just being like standard deviations off the chart and move here for Campbell, I think probably moves 50 cents a day here. You go back to February. It looks like February 13th, and the stock gapped up that day. Might have been earnings as well, from 41.17 to 42. Okay, and all this time, March, April, and now well into May, you haven't come back down to fill the gap. And now one little earnings report, and vavoom, you're back here at $41. You fill the gap on the pre-market chart. I mean, that may be where the stock's heading. Longer term here with the bad news and the bad guidance. But man, if you were waiting for that gap fill and you'd been up trading in the pre-market, you'd be one happy customer here. But now that it's traded so much above that level, now, the strategy is, what do? I mean, if you're short, you just hopefully this thing comes back in. I just think you're going to start finding buyers, maybe the 42 level, 41.50, and I think bids will be lined up all the way down to that 41 even low. Coming back on the upside, since hitting that $42 level, we have found minor intraday or pre-market resistance at 43 even.